Traders, happy Tuesday. Wonderful week to all. I'm sorry for my broken voice, a bit still trying to recover. Not on my best. Please give me some okay that you can hear me and that you can see my screen. Wonderful, thank you. Etienne, good to see you. Mr. Quebec, good to see you. How do you enjoy your spring? Or do you enjoy your spring? Or is there such a thing called spring out there yet? Wonderful, good to hear. So once again, welcome guys. Happy Tuesday to everyone and wonderful week. Welcome back after a long weekend due to holidays around the world. The volatility and the volumes both are pretty back on play as we can see today, which is good. It's been a few quiet days. Welcome to all those of you who are watching us for the first time. Welcome to our family. Two main tips inside the members area of the academy here. Please watch the video through so you understand how to use the members area in your favor. And this is the trading report that you would receive after the live trading room. So that's pretty much it. It's a summary of all the things we discussed. Here you can find the most important videos and the webinars directly. Just click on them and directs you to where it's required. Make sure to watch this video. Okay. And this is the watch list. This is the table. Here you click and it opens the charts for you to basically show you what are we expecting every single time frame, every single pair. And below you would find the detailed explanation. Again, it's not a replacement to the live trading room. It's a good reminder. Our principle of work is very simple. We define the directions we're gonna trade to improve our odds. And the strategy, then every single trader applies personal, private strategies, systems, methods, robots, signals, whatever he or she uses. Okay, the idea is to define the directions according to the money flow. We do it with cycles, and from there, look for setups in these directions for valid ones. Today we have a pretty beautiful list and a few updates of the most recent one. So let's start. The first pairs would be the European pairs, the euro versus the dollar. From this moment here, we became basically after the first rally and the idea of a triple cycle on the 4-hour chart, we became to have a bullish view. Our idea was to get a bullish correction in two waves, range or a bullish hidden divergence, and look for buy setups. Now we got one straight movement down. It did provide a bullish hidden divergence. Technically, it's a perfect sign for buys. However, here we can see that exactly the warning signs I am talking about always, that's exactly what we faced in the euro dollar. One straight move through all the Fibonacci levels. One straight move, not two waves, one straight move. Why this is so suspicious sign normally? Because if this is a triple cycle, which makes 3 higher highs, 3 higher lows, and hints for a possible bullish trend, then following, we should be facing corrective cycle. Corrective cycle could happen in the structure of two waves, A, B, C, D, or 1, 2, 3, 4, right? Or a range. This is the idea. If we have one straight movement, it should not cross below the acceptable Fibonacci zone. If one leg crosses below that, it does not really give normally enough chance for the second leg to be developed and for all that structure to remain relevant. Okay, so this warning sign that we got from previous week is still on. The euro dollar basically after crossing through 61.8 and never providing a really new bullish momentum. What kind of momentum I'm talking about? Again, the principle of higher highs, higher lows, 3 of them, right? We never got this turnaround, and that's why the euro dollar, basically this structure here was a fake one, not a one to make any conclusions based on. So the question after showing that is what's next? So the euro dollar is possibly back to its 61.8 zone. That brings us around the 110. Daily to redevelop. When exactly will this happen? We don't know. But the daily has to redevelop its divergence. It could be as low as that. It could be simply bounce from here by tomorrow. We cannot ever predict how it will happen. But at this moment, on the short term, the momentum is back to bearish. After breaking below the 61.8, not respecting 2 waves correction, not giving us any range corrective cycle, nothing like that. This is a warning sign, and this warning sign is pretty clear. So the euro dollar on the short term is back to bearish. The expectations for that to continue, and once it's ready to recreate a bullish momentum. Now, why did I say it's a short term? Because don't forget the weekly is still finalizing, sorry for the ugly drawing, but finalizing this double cycle and building this bullish divergence. It does not change the long-term picture. It will find a bottom. When exactly we can't say, and this is what we would expect from that to happen. Meanwhile, we don't know when, we don't know how it will turn out bullish again. That's why the shorter momentum for the euro dollar is now back to bearish. Okay, and the plan is bearish, meaning looking for sell the rallies with valid setups. Okay, next on the list is the euro versus the pound. Our long-term plan is bearish. Why? We are trading here a triple double. So this was our view, triple cycle, and this is what we expect. No bullish divergence on the ending part, nowhere. So our assumption is we are going lower. Okay. The idea is how we sell with weekly chart when daily is with us, right? So daily to support the weekly. And what do we have on the daily? The daily we were facing the 2 waves. Then we got a false break and a bullish divergence. So this is an acceptable scenario of what? Of a corrective cycle. What is corrective cycle? We just discussed about it. Double wave or the range. At this moment, it fits in both. Why? Because we did have a false break on the bottom. We do have a false break on the top. That makes it a possible range. And why does that fit in 2 waves correction? Because this was the first one, push, second one. So all these little rallies are still acceptable. They can even push higher. But the goal is to look for the next sell portion. To do so, what is required to be is the break of the last cycle inside the range. So if this is our range from the daily, this is our last cycle that we are facing. So once we break below that, we can go and talk about sells the rallies again. Sell the rallies. Sorry. Okay, so this is our plan. We do need to break below the trend. Now, here's a question that is very good to be asked. Can we then go and say, okay, so here is the most recent trend, and why don't we go and trade it? because this trend line is not a full cycle inside the daily range. Don't forget that as you squeeze lower from daily to 4-hour, if daily was the range, then the last leg inside this range has to be a cycle by itself on the 4-hour. If you are about to say, okay, so this is a cycle, that's not a cycle, that's not the last cycle. This is your last cycle, double, triple, you name it, but this is your last cycle. Okay, so you can't just go and fit and say, oh, okay, so there is trend here or whatever, and just going to sell because it will be wrong. You can't just market trend for your needs, right? So the last trend line available in the cycle that you are working with. If you ignore the weekly and the daily combination and just say, okay, so let me just say this is double cycle from the 4-hour and it is approved with the 1-hour, why can't I go and trade this on the 1-hour? The answer is yes, you can. But if you trade the 1-hour, then you have to remember that your signs against would also derive from the 1-hour. And when you would see something like that, for example, you would have to go and to make action, right? Why it's important? Because so many traders, what they do is they say, oh, but I have a divergence on the 1-hour, or even worse than that, 50 minutes. And from that make assumptions and beliefs and convince themselves that now the daily and the weekly would move. That's a complete mistake. Okay, and I want you to understand that and the logic standing behind it. Try, in general, try not to work based on rules. Try to have logic. What each step leads to. If you do that, what could happen and why? Try to understand the why, not just press here, buy or sell, and put stop-loss here, take profit here. That's not correct approach for trading in general. So instead of just, okay, so where do I buy or where do I sell? It's the easiest thing, of course, right? That's how we think, right? That this is the easiest thing. Just tell me when to sell, to buy. Instead of trying to understand the logic. The logic is, as explained, you cannot assume from low time frame that the higher time frame cycles are about to move. Okay, this is very, very, very important to understand. Michael, could one take it to be bearish if new high and lower low? Not sure I understand what you mean. You mean if we start to see the structure of lower highs, lower lows? Is that what you're asking? Like this? Is this a question? No. So I'm not sure I understand that. Do you want me to give you a microphone, Michael? To show your screen? Just want to remind you guys, this is interactive, so if you want to show your screen and ask the question, just let me know. Fallsburg and lower low, so something like that. Yeah, right? So can we then assume it is a possible reversal? The answer is yes. False breakout inside the range would give you an assumption that this cycle is over or ending. False breakout represent a possible ending, and the lower lows represent a possible reversal. Exactly. So yes, if that happens, the answer is yes. Okay, but again, my personal belief is that when things happen, they happen pretty much the same time. So there is a good chance that until this will happen, you will see something like that. So a false breakout and then lower lows, enter and then breakout, just for example. Okay, so the answer is yes for your question. Okay, guys. So once again, that was very, very important things to say that I wanted to show you and to remind you. I see these mistakes among traders happening over and over again. So remind yourself, do not fall in love with 1-hour chart signs, because on the 1-hour chart, you will find some beautiful engulfing, some beautiful divergence, some beautiful trend lines, some beautiful, of course. But I have better news for you. If you go to 1 minute, you would see even more of them. So you don't want, you see, 1 minute looks like, oh wow, that's a beautiful chart, but can we make really decisions and assumptions from this to the higher time frames we work with? The answer is no, of course not. So the first thing you do when you decide what time frame you trade is answer yourself the question, what cycles and what trends are you working with? If daily and weekly have nothing to do with your direction, then of course you don't need them. Then work with the daily 4 hour or 4 hour 1 hour. But then your management also will have to be according to them. To enter on lower time frame and to say it will be fine and try to ride is wrong. So euro pound, we are after sales. That's the bottom line. That's what I wanted to summarize. Remember that. Euro Aussie, our long-term bearish plan was beautifully going, and what happened on the end of previous week is exactly what we were talking about. Pay attention to. Pay attention to what? Pay attention to the ending part of this double cycle. Now, does that change with the bullish divergence, of course? Now, does that change anything of the long-term plan? Let's go back to the long term and see. What are we trading here? Sorry. What are we trading here? We are trading here this cycle. The correction we expect would be 1, 2, or a range. Both scenarios are still more than acceptable. By the way, why did I skip this spike when I measured the double wave here? For one reason. Spikes are relevant if normally, of course, you never can predict forward, but normal, this is how I work with them. When you have the momentum continuing after a spike, then you respect it. When it's just one-time appearance, then you respect the high that is surrounding the before the spike really happened. Okay, so that's about the spikes. I normally ask about that. So what do we do for the case? Let's go back to the weekly. According to the weekly, we're bearish. Okay, we never got triple double, so 3 and 2. We never got a range. So sell the rallies is good plan. To sell the weekly, daily has to be with us. Is the daily with us? The answer is no. The daily currently is against. So what do we have on the daily? We have beautiful stop losses on, right? Clearing stop losses of these lows. Bullish divergence, meaning we are good with correction. What kind of correction can we face? 2 waves, and then we are after sales, or a range. So we can continue to dance inside here, and then we'll be looking for sales. Meaning that the euro Aussie on the short there is acceptable scenario for buys. So it's also what we would like to see, kind of like that, correction and buys. And then we will be looking for sales. Now, keep in mind that because you are against the weekly cycles, trading this would become aggressive, which means lower risk would have to be applied. Okay, and for all those of you who are just for conservative setup, then now it's time to be on the fence. Wait, and once the 4 hour becomes the 2 waves or the range we just spoke about, then it will be time to go and look for sales. If this is one straight leg on the 4 hour, remember on 1 hour it will have to be cycled, and this is pretty much what's happening right here, something like that. Right? Then we're very likely to face this and rallies again. Make sense, guys? Okay. So Euro Aussie short term, we expect a corrective cycle due to the daily divergence and double wave. Once this completes, we are back to the longer term sales from the weekly cycle. Okay, that's our plan here. Euro versus sorry. Wow. Hard to speak a lot. The breathing becomes short. Euro versus the Kiwi. Our plan was and remains bullish for the long run. Quick reminder, this is what we're facing. So our expectations are like this, right? As long as the last low holds, meanwhile, at least, right? So this is for the long term. Now, we are buying as long as all the signs are with us. Daily was with us, and we do need to pay attention to the slowdown that currently starts to happen. If daily is the first leg from the weekly divergence, so this is what we assume to happen. That means we are coming to a critical zone where the traces might take place. Pay attention for all those of you who work with the Bollinger Bands techniques. Pay attention to the Bollinger Bands duplication. Pay attention to the moving average 200, beautiful zone. Psychological level of 170, we are very close to that. Okay, pay attention to the clearing zone. A lot of stop losses are located here. So there is a good chance we're going to clear that like this, start the protection, start the correction, and then move up again. So this is the assumption. Now, on the 4-hour chart, it has to fit in. Let's put the levels for the cycles. What do we have there? 161.8 is right there, slightly below the 170. If we measure the second leg, which we claim to be this, then its duplication is also around the same zone, critical area. So our assumption is that we're going to face this correction, and after that, we will be looking for buys again. How do we work with reversals? How do we verify reversals? Why reversals? Because at that rally, we are with the bullish cycle, and trade corrections means trade against it. How can we do that? There are two approaches for that. Two false breaks. False breakout is a fake attempt to create a new high, fake breakout, and then lower lows. We call that convergence. That could be full or just by principle, lower lows. Full is much more reliable, of course. Full is when the price and the MACD follow each other. Okay? Or the alternative is 3 lower highs, 3 lower lows, and then looking to sell the rallies. Okay? This is the idea. Before that happened, can we really go and say, oh, okay, so let's sell? Of course not. Of course not. Why? Why would we say that? The trend is bullish, the momentum is bullish, the cycles are bullish, the money flow is bullish. So just to go and say, oh, so it has to crash from here, would be a complete mistake. Traders tried to do that here, here, here. Some of them maybe try here. Why? Just because there is a resistance, just because there is divergence, just because other reasons? No. Verify, guys. I always say that. Hopefully, most of you already accept it, and those who don't will accept it. Trade facts, not wishes, expectations, rumors, or wannabes. Okay? Trade facts. Why it's important? Because it increases, it doesn't guarantee nothing, but it increases your chance to be right. As simple as that. Trading is a business of statistics. When you improve the numbers and the odds in your favor, you have better chances to be right. As simple as that. Next one on the list is the Euro franc, a skyrocket, which reached a very good zone for a possible reversal. So what do we have here? First of all, we switched to bullish after the weekly tick divergence. The idea was buy retraces from previous week. The 4-hour gave us this little pullback and bullish divergence. Well, it was kind of two waves, not something I love to rely on because they're not clear. Okay, but the bullish hidden divergence was there. Daily had nothing against us, so the momentum was and remains bullish. Now look what happens. We are facing here, so sort of a special cycle with a divergence on moving averages, with price dancing around or bouncing from around the very psychological zone 115. Bollinger Bands traders would pay attention to that we have here a band-to-band movement with 50% deviation. If you have no clue what I'm talking about, you have this for winners in the media zone. And if you want to take it very deep in understanding, Divergence University. Now, what do we face? According to weekly bullish divergence, we expect a corrective cycle. Corrective cycle could be 2 waves or a range. If this is 1 wave, which it looks like, the 4-hour must be cycle, and it is. We just saw that, some sort of special. We are on the top of this horizontal range that this pair offers, very close to psychological 115. There is a very good chance we are in front of a correction, which we will want to go and to buy after. This is the plan. Buy retraces. If you want to trade these retraces, then remember, verify that first. How do you verify? We just spoke about it in terms of the Euro Kiwi. False breakouts, lower lows, or 3 lower highs, 3 lower lows, and then sell the runs for the short term, of course, in that case. Okay? I'm done with the Euros. Any questions so far about any of them? Now, the ones that are not included are simply because they're not clear to me. I'm trying to cover the ones that I have a clear picture or a clear expectation. Because when I can prepare my plan, that means I will be able to trade this plan. Right? If I can't, there's nothing to do. EC stands for Gord, Euro Swiss? No. Oh, EuroCAD. Well, actually, that's a great question. EuroCAD. Well, I don't know, to be honest, why it's not on my list, but I'm bearish here. I don't know why I didn't include it for today. We have it. We discussed about that. My view is bearish. So the rallies. Quick reminder: this is the plan here. Thank you, Gord. Totally missed this one. Triple cycle. The expectations are this 1, 2. Now, since this is a monthly, weekly must be with us, which means the pressure has to be bearish as well. We faced, this is the first cycle for the monthly, right? First leg. Then the weekly made a triple cycle and now a range. So our plan was to sell the rallies. On the daily chart, we got a 2 waves. We got a breakout here. It was bearish. Then it was blocked by double bottom with a bullish divergence. Correct? So at that moment, the idea is 2 waves. We always squeeze lower, right? So the divergence again, squeeze lower, corrective cycle. Get the corrective cycle. From this moment of the breakout, the pair was under bearish pressure. Until when? Until we would start to see signs against. Unfortunately, at that moment, here is white. Now I remember gold. And unfortunately, since then, well, maybe due to holidays, maybe due to many different reasons related to that, but this is what we got. We got a blockage on the 150 psychological level with bullish divergence. At that moment, we lost the synchronization. The bearish plan for long term is still on, but short term is currently totally against. When we don't have a synchronization, what's the best thing to do? Get out and wait for the next setups. Please note, the long-term cycle did not change. Okay? It was and remains exactly the same. sell the relevance. However, the short term at that moment isn't clear. Now, what could happen from here? That could be a blockage here on this area, some bearish hidden divergence, and continuation like this. The alternative to that, and they both could happen right now because we lost the synchronization from long term and short term, is simple like that. Again, it will not change nothing. It will just change the timing of the next entry. Can we predict which of the scenarios will work out? No. Oh, well, I wish, like everyone, I wish we had such tools, but we don't. No one does. Well, at least at this stage nowadays. So that's why I say let's trade facts. The facts currently we lost the synchronization, so better not to deal with that. That's my personal opinion. That's why it's not included. Now I remember. I couldn't remember why I didn't do it before. Now I do. So this is about the EuroCAD. All right, next one's pounds. Pound versus the franc. Now we are very bullish on this one for the long term, as you remember, guys. Quick reminder. This is what we are facing here. Triple, double, false breakout, bullish divergence, bullish convergence. Since this moment, we are only after what? After buys. As simple as that for the long term. Daily had a bullish hidden divergence with us. 4 hour head is trending. We got a breakout. We got a beautiful run. What's happening now is we have signs against. Again, losing synchronization. Look at that. This is a bearish hidden divergence. Now, bearish hidden divergence means nothing if the weekly is bullish. However, this bearish hidden divergence comes also with an ending sign from the lower time frame. So it's 2 time frames now, not synchronized in the weekly cycle. See that? This is the one I refer to, of course. Okay, can pretty clear see here our divergence, also the moving average one. So we have both daily and 4 hour to be now against the weekly. Does that change any of the weekly plan for that? Of course not. But on the short view, we can still dance around like that. It could be annoying. That might be annoying. Okay, so long-term plan is bullish. Short-term, we can definitely see some short-term bearish reactions before we move on. For all those of you who are involved with the long term, what do you do when you get signs against? Easy. Partial cash outs, management. We call that management. Partial cash out, stop loss to break even, or both, or just trail your stop loss according to swing points, or any other thing. Management. We call that management. That's why it's there for. You see signs against you, don't try to be smarter than the market. Accept it, apply it, make your decision, move on. Risk-free trade or reduce the risk on trades that have the signs against you. You do not want to let a winner turn to be a loser. As simple as that. So pound franc, long term is bullish. Short term, we accept possible retraces, which after we would be looking for bullish signs again. Sorry. Okay. Could that happen that it will just continue after that without any retrace? Of course. That's why the long-term positions we do management. And partial cash out is possible one. Why not full cash out? Exactly because of that. Because the long-term cycle did not change. So why would you want to kill a full position? Doesn't make sense. Okay? That's for pound franc. Now, pound CAD was a pair that we followed previous week. Pound CAD, we went bullish after the break of this trend here. This was the place where we said also management, and here is a great proof how management is important. You see signs against you on the entry time frame. Listen, here's a proof. So what's next for this pair? I personally hold my bullish view inside this weekly channel. Just not quite sure about the timing right now. I do want to see how this daily candle and potentially next candle would finish. The reason here is pretty simple. This looks like a possible breakout, and it's important to see is it fake or not. If it's not fake, there is a good chance we're going to see that slightly lower back to the daily bottom of this channel. And then we're back to buys. The idea did not change, timing did. As for now, pound cat for me, personally for me, is neutral. Okay. At the moment, this low wasn't validated. Game is over as for now. So once again, this is just a reminder, yeah. This was our trend line. This was our place we started to look for buys. Now look what happens. So one thing is that we can say here, oh, but come on, that's not the move. That's too small. What can I really profit from that? I will give that a chance, right? And that would be a very, very logical thing to say ourselves as traders. However, it will be wrong thing to say, because if the market gives you the signs, there are times it doesn't give you signs. When it doesn't give you signs, you can't really make any action. When it does give you signs and you don't listen, don't blame no one, right? So what do we do when you have signs against you on the entry time frame, especially when it's also related to other time frames? You better apply management. Partial, cash out, stop loss to break even, just trail your protection, and so on, right? But do not let a winner turn a loser. Why? And this is the best proof. And should you kill a full position? I don't believe in it. Why? Because if the weekly is still bullish, that can fly without any prompt alert. So you definitely want to give yourself a chance to be involved in a skyrocket if it happens. Most time it will not happen, but you definitely don't want to miss the ones that will. That would be your performance boosters. So pound cat for me at that moment is neutral. And the one that we add on the list is pound dollar, short-term sells, long-term buys. Here's what we have here. So first of all, we're still facing this beauty of triple double, same like the pound franc. Okay. Now we do want to see this retrace and the next buy is taking place. This is from the weekly. Look at the daily. Daily had for us triple cycle, triple descending cycle, 3 higher highs, 3 higher lows. And right now it's making corrective cycle. Now take a look what happens here. This is what we are facing. Okay, so this has to reveal its divergence. This has to become bullish divergence. Once it does, we are back to buys. What could be the possible levels for that? So if we measure here, that could be around 120, well, slightly like 129 and slightly lower, or all the way down to 127.50. Would that be acceptable? The answer is 100% yes. Remember the stop losses areas we always speak about, right? The clearances where a lot of stop losses are located. This zone definitely acts like one. Okay. So as for now, short term we are bearish. Once this becomes a bullish divergence and we start to see lower on lower time frames, bullish turnaround, we are back to bullish. Of course, that could be also false breakout and higher highs. Okay, so pound dollar, short term, bearish pressure. Once it's over with a bullish divergence and turnaround signs, we are back to the buys. Aussie pairs, Aussie dollar. We had a massive rally there, as we wanted to see, but then it was blocked on this trend line. Now look what happens here. This is a two-wave push, false breakout. It happened again during this long weekend. Okay, and look what happens there. Daily is double cycle. Each of the daily legs is a cycle by itself, and you can measure that, of course, differently. In that case, I think it would be the right measurement, triple. Okay, this is the idea here. Now, once it's over, and again, you start to see the signs against, double cycle from daily, verify with divergence. Each of the legs, verify, right? False breakout, and lower lows. Now, what's this drawing here? And the lower lows. This is the place, basically, where the bullish game is over. So what's up with the Aussie dollar? Short term, like the euro, like the pound, is back to bearish. Why short term only? Because according to the long term that we trade here, just a reminder, it's a special cycle. So once it's over, we're back to the bullish view with this bullish divergence for the long term. Now we can't just say it will be fine in the long term, it has to show the signs. So there is a good chance we're going to face some kind of movement like that, divergence to rebuild, buys then. As for now, that's not the case. Last movement on the daily is double, blockage. We do not yet have any bullish momentum. What is a bullish momentum? Higher highs, higher lows. Nowhere. Since this low, nowhere. So Aussie dollar, after making this rally, and we were trading it for a good while, and showing the turning signs, we have to listen. Meanwhile, short term is bearish. Okay, that's pretty much it. This is for the Aussie dollar. Aussie Kiwi, another monster we are enjoying. The bottom line here is very simple. Long-term buys was and remains our plan. This is what we have here. Special cycle, ranging correction. This is what we are after. Weekly fits in perfectly. Currently developing a potential bearish hidden divergence, and this is why potentially short term would become a corrective cycle. Going to the daily, what does the daily have for us? Bollinger Band duplication, bearish divergence developing. Assuming this is the first leg from the daily, this should be next, this should be next. 4 hour has to fit in. If this is the first daily cycle, 4 hour is forming and showing here a possibility of a cycle by itself. Yes, the two candles are missing here, but we do have the two waves retrace. We work with that. Okay, so corrections are welcome. With bullish evidences, we are after buys. Our plan, buy retraces with bullish evidence. The best one here would be to get the retrace back to the middle of the Bollingers or down to the lower band of the Bollingers, get a bullish hidden divergence here. That would be the best. And start looking for the buys from there. Okay, that's Aussie Kiwi. And the last one of the Aussies on the list, Aussie Franc. Another one that we enjoy rallying, beautiful one. Long term, still bullish for me. Just a reminder for those who watched that for the first time. This is what I expect. So for me, it's only after buys. Weekly has nothing against. The last divergence in play is still bullish. Daily has nothing really against. So for us, the plan is bullish, holding our buys. For all those who are out of the game, buy retraces with bullish evidences. Two waves, bullish hidden divergence, range. Okay, all that is very acceptable to enjoy the rallies on the Aussie Franc. Questions? Questions as for now? about any of the discussed so far? OZCAD. Now this is a good one, yeah. The reason I didn't yet include that in the live rooms, we covered that, and by the way, you have a post about it in the blog. My guys uploaded it there. The only reason I didn't cover that is because I don't see any clear cycle. So there is a channel on the short term, and the 4-hour chart really got the structure for us, right? To the bottom of the daily channel. And that's pretty much it. There is no clear divergence on this drop. No bullish divergence here. That's not a bullish hidden divergence for continuation. This is not an ending divergence for the end of the correction. That's pretty much it. That's why it's not included. So yes, the expectations were to see these bounces, but I don't see a trend developing here. So this could be a good bounce, like this. That could be just the waves here. That's pretty much it. I don't see anything besides that. So short-term bounce, yes. I don't see any cycle involved here. Okay. All right. So next one's Kiwi, CAD and CAD franc. Kiwi CAD. For all those who enjoyed the move down, take your money, make your money, wait for the bigger, deeper retraces. So what do we have here? Triple cycle up, double cycle down, bullish divergence, possible bottom of the range. As simple as that. The idea is here, retraces, which I believe we later face as sell again. But as for now, game pretty much over. Okay, that was the first leg of the daily. This is the second leg of the daily. This is a cycle. This is a cycle. Divergence is in play all around. On the short view, it's a bullish run. False breakout, higher highs. Our expectation, as long as these low holds, are this. Kiwi CAD turns short-term buys. Why short-term and why it's still aggressive? Because the weekly still provides us this structure. Just a reminder for you, right? Triple double. 3 lower highs, 3 lower lows, 2 ways to retrace, false breakout, bearish divergence. The long-term plan is sell. But the short term, again, as explained, from daily 4-hour, 1-hour combos, makes it aggressively acceptable for buys with small risk. So Kiwi CAD short-term rallies later, once the daily and 4-hour are back to bearish, we'll be looking to sell them. Next one, CAD franc. Now this was another monster we enjoyed from. What is that? Here, CAD franc. Beautiful movement. We are in from the trendline breakout with the bullish divergence in play and rallying all the way up. We have a resistance here. And besides that, we are getting closer and closer to the level of 61.8 right here. So from this place, I believe we are going to face short-term retraces. And that's pretty much it. Each of the daily legs is a cycle by itself, 1, 2, 3. Then we get a ranging correction, and 1, 2, 3. So this is a very acceptable scenario. After that, very likely we are bullish again, but it's too early to do the side. CAD franc expecting a short-term pullback down. Okay. Dollar franc and dollar yen. Dollar franc, where is that? Here. I was looking previous week, as long as the possible ranging correction holds. I was looking for possible sells here. This idea definitely didn't work out. On the good part, we never got a beautiful turnaround. So we did have an attempt for a sell with this trend line, failed. Since then, nothing. Go only one straight move. So the biggest question is what's next? After not respecting the corrective cycle, likely that the pair is going to the next level. Next level is higher, 103, 104. Bearish divergence is possibly developing. And I say developing because there is no tick down yet. Daily definitely not supporting it yet. So I believe we're doing it. Short-term retraces could happen, of course, but there is a good chance we are bullish here. As long as this trend line holds, the pressure is under the buyers. And the dollar yen, you know my personal view, I want to look that for a sell from one of these levels, here or here, ideally here. Divergence is developing, the weekly is developing weekly here, bearish hidden, possibly. So we need a turnaround. Turnaround is what? False breakout and lower lows. So far, no go, or lower highs, lower lows, and then retraces. Again, so far, no go. We're stuck inside very low momentums. How do you know that? Look at all the spikes around. Too many of them. Simply too many of them. No flow of money on this pair as for now. So my personal view on the short term, dollar yen remains bullish. I would expect to see this rallies continue. I personally skip it because I'm never trading against higher time frame divergences. Even if that means I'm going to miss an opportunity, no problems. And once this rally completes, and we do have the turnaround signs, false breakouts and lower lows, or 3 lower highs, lower lows, this is the moment when I am also back to selling opportunities. So meanwhile, the pressure for dollar yen remains bullish. Again, I myself not going to trade that. Explain why. It doesn't mean it's good or bad. It just means this is my preferences. In the past, every time I tried to trade against higher time frame divergence, I paid. So I stopped doing that a long time ago. And that's all from the Forex view. As per the commodities and indices, we have several interesting ones. But before that, we have an investment trade. This is the dollar ILS, Israeli shekel. And here is what we're facing here. Triple cycle. We had a 335 order. We got a beautiful bounce. This time we got lucky because it was exact call. Not always it's like that, unfortunately. Beautiful turnaround. Then we got 3 soldiers, green soldiers. That's pretty much it. We are holding it. Currently about 500 points in profit. The expectations are still bullish. Stop loss to break even. For all those of you who are involved, I sent this update previous week. Now this is a pending order that we were holding, believe it or not, from end of February, from here. Okay, so remember, when it comes to invest, patience, 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 patience. Some of them take long time to develop, some of them take long time to trigger. Okay, now this was a good example for that. So for all those of you who are involved, keep following and stay tuned for updates. Okay. As for now, stop loss to break even was our first call. Risk free. Risk free. RF. It's not Roger Federer. It's risk free. Okay. So that's pretty much it for the Forex. Now, gold and silver. We are after long-term buys for both. On the short view, this is what we're currently facing, triple double. This has to rebuild the divergence. I assume it's going to happen very, very close and very, very soon around this interval of prices. This is a bank zone. A lot of orders are located in this inner area. Beautiful area, as you can see, around psychological zone of 1250. So I believe this is how it's going to move. Short-term bearish pressure is still on. We do not have the reversal, like higher highs or false breaks and higher highs. Still nothing happened. So the short-term momentum is still bearish. And once the daily divergence and 4-hour chart divergence come in play, we should face false breakouts, higher highs, and buys. That same applied for silver. Same structure, same everything. Same divergence developing. The only disadvantage here is that we don't have clear bank zone there. So we have a massive support here. No problem. So short-term bearish momentum is on. Long-term, our plan is bullish. Once this becomes with a bullish divergence, we are looking to switch. Oil. The idea from previous week was to look for a false breakout here and lower lows. That's what we wanted to see. Never happened. Or lower highs, lower lows, and then sell the rallies. Again, never happened. So what, instead of that, we were facing simple range without consolidation, not even range as per cycles. So the biggest question is what's next? Now, I personally go neutral. There are disorders with the fundamentals, sanctions, and so on. A lot of rumors and speculations are involved. And this is a place where fundamentals and technicals don't meet. Technically, it is developing bearish hidden divergence. Daily has the level and the divergence, but no setups. So in times of disagreements and clear setups, I see no reason to keep following something that is not clear. So oil, for me, becomes neutral. Okay? It doesn't mean I will not be looking for that once it becomes interesting again. Of course I will. And for all those who always say, so if oil goes up, dollar CAD will go down, and so on, don't look at this as a rule of thumb. There will be periods, they will be not going one after another. Correlations exist, they are never, ever absolute. I want you to remember that, guys. Too many traders give too much value for that. Of course, they are correlated. Oil in Canada, it's the biggest financial here, the biggest economy is all around the oil. So what? Does that mean only CAD affects the whole industry? Of course not. So it's very, very important not to do that. You will fall and you will fail many times. Correlations exist, definitely. There are periods like now when they do not follow each other as you would imagine. Don't try to force it. Indices, I have no view at that moment. Nasdaq is on new all-time highs. You know my view with this divergence. I never tried against it. So I prefer to skip the buys, even though that this is currently obvious momentum, and look for my next setups. I never ever go against higher time frames divergences. And this is pretty much it. This is what we're facing. One more addition we start to follow nothing at that moment, but this starts to be interesting. The natural gas, triple descending cycle, this, and that. Bend to bend movement, and I believe with this bullish divergence, developing. Some lows connected. It's definitely some interesting weeks are coming for this one. I believe it will bring us some good levels here. So we would be following that. Likely that we would be investing in that. For all those who follow us for a good time, you all guys remember our invest here, right? The skyrocket. And it's all waiting for next signs. As for now, not there, coming, not there yet. And quick update, the SPT, the swing point trader strategy and the scanner is ready completely. My guys are uploading it, everything right now, to the download page, testing the functions of the download, installation, and so on. So I believe in several days, hopefully sooner than a week, it will be ready. Stay tuned. Will be published once it's up in the website. This is a free stuff for TAC members, and we will go and include that also in our trading, of course, discussions in the live rooms and the Telegram chats. That's all for today, guys. Thank you very much for joining. Tomorrow it's me again with you guys. Jordan is back on Thursday and Friday. Okay, so I'll see you tomorrow. Of course, I'll see you in the Telegram groups. Thank you very much for being here. I wish you a wonderful trading and a wonderful week. Bye for now.